There's not much attraction to get involved. If you do want to buy UK assets, buy the large cap companies that aren't UK-centric. So the UK large caps that are UK-centric are the banks. If you're buying the oil companies, that's what we've been buying this week. We think oil's been hit hard, obviously, and they're not incredibly exciting, but they're very cheap, and they're providing a dividend yield of 6% right now. So those are companies that will benefit from a weaker sterling because their revenues are dollars. The healthcare companies are attractive there. What we're short, and we think will continue to be an underperformer, is the mid-cap stocks in the United Kingdom. Those are companies that are very cyclically exposed. They don't have the foreign revenues coming in, but they actually have a lot of foreign costs. A lot of their input costs are buying goods manufactured elsewhere. So if we do have a weak sterling, you could see a very tight margin squeeze on those mid-cap companies, but they don't benefit on the sales side as much as large cap companies do.
Now, Patrick, you mentioned before that the markets were pricing in certain aspects, what's happening, and kind of handicapping in real time what's going on with these Brexit negotiations. Tell us a little bit about what you expect, what you think is going to happen here in the coming days, months, and weeks. Are we going to get a hard Brexit? Are we going to get some kind of a deal done? Is there the possibility of another referendum?
Everything you said is a possibility because no one knows. I think she's going to put it to Parliament, and I think it's going to fall short. And what that means, I don't know. I don't think we're going to have a no confidence vote in the short term, but if she puts it through Parliament and then it fails, that's a more likely time we'll get a no confidence vote. So I think there's a few dominoes left to fall. We don't know which way it's going to go. The maths are very difficult to see how she gets enough people on side to get Parliament to support the deal. The next question is what happens after she doesn't get the support, and everything you mentioned is a distinct possibility, and putting them all at 1/3 chance, I think, is a reasonable forecast right now.
Patrick, you've mentioned some of the companies and sectors that you're keying on right now. You also are an investor that goes globally as well. What do you think is the most attractive part of the market in your mind if it is not in the UK?
Well, it's the integrated oils in Europe. They're sticking out as incredible value. They're trading at around 4.5 times enterprise value to cash flow to EBITDA. The MSCI World trades at more than double that, trading at about 9.5 times. 6% dividend yields, incredibly attractive. You've got the headwind of falling oil prices, but the integrated companies, which are the companies that have downstream, they have very good margins right there, and a falling oil price actually may even boost those downstream margins. So I think they're very well positioned. Their dividends are sustainable. That's where I'd be putting money right now. It's not incredibly exciting that you're going to get a big pop, but you're going to lock in 6 to 9% return, we think, over the next 7 years, which is very attractive given our outlook for equity markets, which we think generally are still overvalued given a hiking Fed.